Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
All right, welcome back to the High Rise, a laid-back, data-backed conversation on all things cannabis, where we cover U.S. MSOs, Canadian LPs, products, and market analysis. Today, I'm joined by Alan Brochstein of 420 Investor and New Cannabis Ventures. Hey, Alan.
Great to be here.
And Emily Paxia of Poseidon.
Hi, everyone. Welcome to the High Rise.
Well, it's great to be back. And as always, my favorite day of the week, where we're going to talk about all this stuff that's going on in our world. So I thought today, talking about the U.S. and some of the notable headlines that came out this week and tail end of last week. First thing, and actually, Alan, I noticed this on New Cannabis Ventures, that Illinois sales are up. I believe the number that came in for May was 151 million, which included medical and adult use. And when we look at just adult use, I believe the number reported was 116 million. Thought those were pretty good numbers.
I think some people weren't happy. It was only up a little bit sequentially, but
yeah. And actually, looking at some headset data, it seems like most markets are up sequentially, like just slightly as well. So it's kind of in line with everyone else. And I was looking at the population counts, just to kind of understand, what does Illinois look like from a population perspective, to kind of get a sense of almost per capita, but it's about 13 million people in Illinois. And, looking at Michigan, also relatively comparable size, about 10 million. We project 155 million for May over here at Headset, but just about in line. And they've been neck and neck for some time. But I think Michigan has a bit more access. Like the retail licenses, I believe, are not looser, but just more of them available. And I think there's been some constraints in Illinois. And given that there's 3 million more people in Illinois, you kind of would expect a bit more. But Michigan had some good growth, from last year. At the same time last year, it was about 85 million in sales. So yeah, how do you guys feel about Illinois, Michigan? These are the markets, these emerging markets that seem to grab a majority of attention for the U.S. MSOs. What do we think? Like Illinois, is everyone happy with the legislation, the framework, or the MSOs wanting more licenses to have a larger footprint? Do we want to see more revenue coming out of those states?
Do you want to go, Emily? Or?
Yeah, I think Illinois is an interesting one to watch, especially as we watch the new markets that will be coming online, like New York. I think we could see a lot of parallels to the challenges and also the wins in those markets. I think a lot of the people in the industry, and including the MSOs, wish that there was more licensing, especially on the equity applicant side of the equation in Illinois. It's been, it started off like there was a lot of positive lip service around it. But again, like this issue tends to play out time and time again. The action around it has been really challenging. And seeing that the equity applicants have been kind of just hanging there on the vine, waiting for, access to getting doors open, has been incredibly painful to watch. And we don't want to see this again in future markets. So even though we've seen it in the past, it's been very crystal clear in Illinois that it's dysfunctional. And I know there are CEOs of some of the MSOs who just don't feel right about that, including like Ben Kovler from GTI has been very vocal about this. And I think it's because many of us have a vision of building an industry that has lasting power and does have more of an equitable approach than other industries have in the past. And so we really want to make sure that that is happening. So, and, in general, I think there's been challenges in each of these markets on different sides of the supply chain. Like Michigan, you're right, did have more licensing available in terms of retail, but what happened there was constraint in supply. They did not have enough cultivation and manufacturing online, and so it just becomes very difficult to make sure you've got the right product assortment and representation on the shelves if you are a retailer, and then also the pricing challenges that happen around that if you have to navigate those markets. It happened in Illinois, it happened in Michigan, it continues to be a challenge there. So it's interesting. I think about Michigan too. I think it does have a very strong illicit market. A lot of us kind of think of it as the California of the Midwest in terms of having a lot of that legacy notion of being preferring to shop in an illicit market rather than going into the regulated and legal stores. So I think that continues to be a pervasive problem, and I think it could be suppressing a little bit of the growth in the market. But year over year, it's still really exciting. So.
So I think one of the cool things about Illinois that I hear from the MSOs is a lot of them have set up stores right on the border of, like Cresco has one in Wisconsin, several down right by St. Louis. I think Merrimed has one near Kentucky. Forefront has one in Indiana. Jushi is one of the ones downstate. Ascend as well in Collinsville. Yep. So these stores are killing it. It's pulling in traffic where people don't even have medical in some of those states. So I think that's an interesting part of the growth there. But definitely huge shortage of stores. I think they're almost all open finally. It's about 110 is where they are now. It's way too few. If you look at Colorado, smaller state, lots more dispensaries. It's crazy. And of course, the social equity part, I mean, this is a travesty.
Yeah, and I think we think about this a lot because, you mentioned Collinsville. I mean, that store has traditionally had a line to get in, and many of the stores in those locations that you were talking about do, because there's just not enough doors per capita. And so, in traditional retail, you think about removing friction to purchase, and a friction to purchase is absolutely having to wait in a line and then wondering if by the time you get into the store, because of the supply challenges, if the products that you went and got in line for will actually be in the door. Now, a lot of stores do have order ahead, and there are ways to get around this and ways as retailers to improve the velocity through the door. And so those are really important. And also to, have more reliable menus so people do know what they're able to get access to. But all of those things are friction points to closing every single sale. So.
Yeah. And with the recent news of the tax revenue too, you think there'd be some incentive to kind of scale this thing out faster. I believe it was for the first time at Q1 of this year where cannabis sales, or tax revenue from cannabis sales outpaced liquor tax revenue for the first time. It was about 86 million coming from cannabis and about 72 million coming from liquor. So, I mean, that's a great headline too, right? One of the reasons, why we're so pro legalization is, to be able to tax it and regulate it. And, those taxes go to great things like schools and other, important aspects that would have, in markets where there is no framework, cannabis still sells, it's
Yep.
Black market. And unfortunately, there's no ability to capture that tax revenue. So you'd think a market like Illinois that, has some decent growth and can be a sizable tax base income for them.
I think the investor takeaway, though, should be extremely positive. There's a supply side that Emily alluded to as well. There wasn't a lot of capital a year ago. Obviously, we were right at the trough of the stock market as well as the peak of the pandemic fears before we even, it was exactly a year ago, maybe a little bit earlier, that we realized being an essential service is actually a very positive thing. And so a lot of the capacity that's been being built out, it's being scaled up right now. So we will get those new stores and we will have more capacity because it's both sides of the equation.
Yeah, absolutely. And, it's interesting you mentioned kind of the border cities and how they perform. And I know we're going to touch on California here. And there's some data that California has published on the county level. And there's still some dry counties in California. And someone here at Headset mentioned to me this week that we need a better term than dry county for cannabis because it works for alcohol, right? But I couldn't come up with a good one. So if you guys have any ideas on what a dry county is in cannabis?
Smoke-free? I don't know. Vapor-free.
It's not bad. It's not bad. But there is some data I'll touch on in a second here that kind of shows some of the same trends in California. But I did want to bring up California because, Alan, you published in New Cannabis Ventures kind of this article around MSOs remain timid towards the largest cannabis market, which is California. And you laid out the different companies and their presence. And some have, minor presence, some have, major, some have no presence at all. Mm-hmm. I know some are investing currently. But I thought it was pretty interesting. It's something that we've talked about on this podcast before. And then there's California operators that are solely focused on California as these large single state operators, but they have ambitions to become multi-state state operators, and a lot of their kind of thesis is around, things that start in California trend for the rest of the country, which would assume that they have ambitions to go beyond the California market. But they haven't yet. So, would love to get some color on the article and how you think about this. And are we going to see more MSOs coming into California? What's ahead here?
Yeah, I've been pretty bullish on California for a year now. Obviously there were a lot of challenges. Emily could speak to them. She's right there in the market. She knows. But so it was very slow to develop. And I think people didn't wake up to the fact that a lot of progress started to be made about a year ago. And in the most recent month, I think the sales were like record year-over-year growth, or the highest it's been since the start anyway. So the market has turned. It's still a really tough market, but you take somebody like GTI, very adamant about it's not a good market. It's not one we want to be in right now. Sure, one day, and so they stay on the side. I know Emily's involved with the SIN. That's not their kind of market. A lot of companies, and I'm not saying it's wrong, but they want to maximize their near-term margins. They think that's what their investors want, and maybe that is what their investors want, but is that the right thing? It seems to me that, and I'm pretty much a bear on federal legalization, like it's going to take a long time, it'll be hard, but it's hard to imagine that if you have interstate commerce, that California, which is already supplying most of the nation through the illicit channels, it will supply it through the legal channels, seemingly. So it seems like you want to be in that market. I like what Cresco did. They're paying a big price. It depresses their EBITDA margins. It's depressed their growth rates to some degree by being in the market, but they're biting that bullet now. And I think, hopefully for them, the dividends will be reaped. And, we are seeing like Forefront, and I didn't talk about them in the article, but they're not one of the top dozen by revenue yet. But I think we just interviewed them today and we talked to them about this. I mean, they're making a huge bet on California. I'm curious to learn more about exactly how they're going to play out. But like you said, Cy, there are some companies that are pure plays there, and I think they do have aspirations of being interstate commerce shippers or licensing some of what they do. These are the models, but I don't know. I'd rather be in a tough market. The whole MSO space has stayed away from, well, Washington they can't really be in because you have to be resident. But Oregon, super tough market. They stayed away from that as well. It's not that big of a state. It's probably not a big deal, but how do you stay away from California? What do you think, Emily?
Yeah, I mean, it's the biggest and by far the most competitive and most interesting market to me in terms of actually having to execute on excellent retail, delivery, vertical integration, and brand building. I think that it's a look into the future for other markets when they get to that point where they do have real competition. And I think that the savvy operators know that they've got some road to run in those markets that they're in on the eastern side of the country. But I think they're starting to pay attention to what it would mean to have a missing link in your entire cannabis organization by not having California as a part of the ethos or the infrastructure of your company. And we talked about it last week with the play from Amazon. Is this the big hedge that we go more quickly to interstate commerce than some of us would like? It's interesting because I do have investments in California. We put our firm in California. I'm a big believer in this state, and I think that we'll have some tent poles across the country, including New York and California, that will be very interesting arbiters of what happens in terms of the trends in cannabis. But I think that California today still has some of the richest heritage, with the Emerald Triangle being here. We have wine country here. Cannabis is also a part of those counties, like Sonoma County in particular is a place we've leaned in on. So I do think there's a lot to be done here. And I think I'm seeing more and more MSO interest being paid to it. Although I will say I feel the market does kind of penalize them for it because it's just a different beast than what you get to see in terms of your growth and EBITDA on the East Coast. So it's just something it's like, do you take a little bit of the pain to make sure you put a critical piece into your portfolio if you're building a big national cannabis company?
Right. So I mean, just so the listeners understand, the prices of companies in California, whether they're private or public, whatever it is, they're way lower, no matter how you look at it,
Yeah.
than the East Coast ones. And so, you get a market like Pennsylvania, which is fine now. I don't want to alarm anybody, but it could change. It could become oversupplied overnight. And I don't think that's this year, but who knows? And so right now you have companies that are making coin big time. I mean, high growth, high margins. So investors love that. But the second that stops, it's going to be a problem for somebody. And so, we've seen a lot of MSOs go into Pennsylvania recently, Air and Trulieve and Verano. So the early incumbents, Cresco, GTI, and Terracin, they have company now. And so I think investors, when they're thinking about, where they want to invest, they need to appreciate, do you really want to pay high price for high margins that have probably one way to go and a growth rate that probably has one way to go? Or do you maybe look for an excellent operator in California? Yes, it's a lower growth rate right now than some of those states, and it's a lower EBITDA margin for sure. But the long-term growth in California should be incredible. It's so underpenetrated right now. I mean, you must have data for that, right?
Yeah, certainly we do. And just to give listeners a sense of scale of California in May, because I know we're talking about Illinois and Michigan. In May, California did 430 million in sales, so about 4 times the size of these other markets. But I think it's frankly still much smaller than it's going to be longer term. It's still early innings for a state of this kind of scale. Speaking of, I guess, data, California recently released data on county by county, which is pretty interesting. So you kind of see, where the sales are going, what California looks like. And to that kind of growth story, there's still a lot of, I'd say, underperforming counties. So we took a look at the data. And the top 5 counties in California accounted for almost 60% of the total Q3 2020 taxable sales. This is as recent of the data that they gave. So a little older, but still the top 5 counties. And the number 1 county was Los Angeles. And they contributed $388 million. And again, this is for Q3. And then when you look at a per capita, that was about $38.13 per capita. Now, we looked across the state, and the unweighted average spend per capita for the quarter is $41. So you can see a market like Los Angeles is actually under, the rest of the state. So that's just one signal, and there also is good growth rates. When we look at LA, it grew 100% versus the same period last year. So it's growing strongly, but there's still plenty of dry counties, and that kind of brings me back to this border state thing we were talking about with Illinois. So these counties like Mono County, which is really out there, kind of borders Nevada, is just surrounded by these smoke-free or vapor-free counties, as Alan mentioned. So their per capita is $120.
Wow.
And you compare that to $38 in Los Angeles. So, that shows something, right? That, these other counties, need to get their act together. A lot of, I know California is really pushing for that too, to get them, bought in. But I do think that there's still a lot of growth, not only in converting these, dry smoke-free counties, but also in the counties where sales are happening, they're continuing to grow. So there is a lot of opportunity yet in California. And, I'm kind of with you, Alan, on why not, see if you can compete. I think if you can make it in California in a competitive market, I think you're going to be better off. You have to survive in a lot of ways. And I'm here in Seattle, and Washington State is very competitive, similar to Oregon on a brand perspective. And Forefront, has a pretty big Washington presence. They've got a lot of brands that they've developed here in Washington that I think it's part of the plan to bring those brands down to California. And a lot of their brands do really well here. They need to translate that success into California, and they're going into a saturated market. And a lot of the brands that they developed here, they developed early on, and so they're capitalizing on some of that age that those brands have. But it'll be interesting to see how they do, longer term. So I'm really looking forward to seeing that. You mentioned Cresco. You like the Cresco model, and you called out that on the article that they're focused on cultivation, processing, and distribution. Is that what you like about it? Not kind of having a retail footprint and being more of a CPG like company in California?
So I want to be really clear. I like retail, and I also have no problem with the parent company that's trying to be everything with more of a delivery flair. So I don't think there's a magic model in this country. I think the magic model is you should do what works for the best for you, and not everybody has every skill set. I just like the focus of Cresco and the fact that they became a major CPG and distribution company, and it's expensive to be a distribution company, and they're not doing that for the kind of gross margins they get in Illinois or Pennsylvania, that's for sure. So I just like the fact that they have bit the bullet and have a major presence. Of all the MSOs, I think it's safe to say they have the largest presence per. Okay, so 88 million in sales in 2020. I forgot what their total sales were, but roughly 20% of their overall revenue. Nobody else is like that. And I think I maybe mislabeled Cureleaf. I guess it depends on how you look at it. They bought the Select brand. Right. They just have one processing facility, but they do business there also. But when you think about their market cap, their overall revenue, all that, it's rather trivial. But no, I like retail too. I think California is a little bit different. In other states, retail is really interesting because if we do move to interstate commerce, and if we do get rid of 280E, these are two things that are great for retailers. They'll be able to get better. It's not just lower cost; it's more reliable supply as well. When you're a captive, some of these states, people that were going to be retailers only said, "We can't do this. We have to have." Like I listened to Ascend. I think it's a good example. We have to control our own supply a little bit because we can't be slaves to the wholesale market. And so a lot of change will happen one day in the future when we have federal legalization, we have interstate commerce, and you can be running a store and really be that connection to the consumer and get all your product from California or whatever. So I don't know about California retail stores specifically, but I think retail's way undervalued in general. People, from an investor standpoint, they like cultivation. I mean, back 5, 6, 7 years ago, it was always who has the biggest grow, and it's like this doesn't even matter. But I think Starbucks is a good example. It's a retailer, and I think everybody says they're going to be the Starbucks of cannabis, but there will be one.
Mm-hmm. I mean, unfortunately, in California, it still really matters to have the full vertical.
Yeah.
These operators woke up and were like, we want to be 10 businesses in one. It is very difficult to run a fully vertically integrated cannabis operation and do it time and time again across these different states with different regulations and challenges. And in California, I think we all had hoped that we could lean on more outdoor, more greenhouse, and just have a steady supply chain. But the regulatory process couldn't keep up with getting enough people online. I'll say it, we lost a lot of people back into the illicit market who kind of threw up their hands and said, you know what, I'd rather take my risks again and see if I can benefit from it, even if it only lasts a few more years, instead of trying to participate in this extraordinarily challenging legal framework. And then, I just think it's been interesting. And so if you're retail only in this market, you still really struggle to have consistency of supply chain. And then we also had real challenges for the brands in terms of distributors. So the market is huge. And I will say in California, there's a huge difference between the demographics and the interests in purchasing decisions made in San Francisco Bay Area versus LA, and then even from LA to San Diego. It's all a very different interest set and types of products that are being attractive to those different cohorts. Or even if up in wine country north of me, it's different. So it's a wildly different state, and it has a lot of challenges, but being retail only, especially with the tax structure we have here, it just becomes incredibly difficult. And I've seen it time and time again that it still matters if you can have access to the full vertical. And And in California, depending on the tax of the local jurisdiction, where your cultivation and where your manufacturing is matters. Like being a manufacturer in Oakland is very expensive versus being a manufacturer in Santa Rosa. It makes a huge difference in your business. And so it's really down to those fine details. But I'm really glad you mentioned that one other really important point, Alan, too, about investing based on the limit of the license is a good thesis as long as you know your operators are preparing for the moment that can change. Because we saw this, and it happened to us, frankly, in Washington State when we invested into cultivators, and this is back in 2014, and there was a cap at one point, and then that law changed and blew it wide open. And luckily, we were in the top groups, but there was a huge washout on the back end of that because of just classic economic laws of supply and demand and the retailers holding the power on that.
Yeah, and I think that's similar to Oregon. I think supply is not as challenging in places like that. It's just every market is so different. The access to supply, I think that was an interesting aspect we might have touched on last week with the glass house and the parent company and that relationship, because I would have assumed certainly that they were going to be head-to-head competitors, but parent company is sourced supply from glass house, and they kind of mentioned to me it was like a Samsung Apple relationship where iPhones have Samsung parts in it, but Samsung and Apple are very competitive when it comes to the actual product that's on store shelves between the iPhone and maybe a Samsung Galaxy phone. Yet they have to work together too, and so you're seeing
they both win in your example, right?
Exactly.
Yes, they're competitors, but they both win.
Exactly. And I thought that was a really interesting way to think about it. But it has to do with supply and just making sure the parent company, I'm assuming, wants to make sure that they have access to that supply to meet that demand.
It's just they're both SPACs. They're just trying to help the SPAC cause. Kidding about that, but it's really tough. And I think the parent company is a great example of a capital markets disaster, but a good company underneath. From what I gathered, some very important pieces. And one thing they were missing was that supply. I actually talked to the CEO of Glass House because I wanted to better understand that deal, and of course he wasn't going to give me the exact details, but it sure sounded like a really good deal for the parent company from his perspective because they needed money. I mean, I don't know if you're following, but they went public, or I'm sorry, they announced that deal, and there was supposed to be all this cash. The redemptions were massive, so
the Mercer
unfortunately
Park.
They needed cash.
The Mercer Park Glass House redemptions were
big
massive.
Redemptions. They just put it out today. It's just huge redemptions. This is the problem with SPACs, quite frankly. And I mean, I know Emily was involved in the first cannabis SPAC of all, and there were big redemptions there too, right?
Yeah.
Actually, that's not the first cannabis SPAC. That was the first NASDAQ SPAC. Sorry. There were SPACs before Akerna, I think. Air and Columbia Care were SPACs.
Correct.
Yeah.
I actually think, though, that MTech was
first?
First, yeah.
Okay.
I'll
Did it
give
close
Scott
its deal
Sozio
first,
had a
though?
vision for that, and because I remember having to explain SPACs to people was extraordinarily difficult.
You still don't get them, do you? I don't.
Well, I mean, after spending all that time, I get it, but it was a heavy lift on both on the investor side. I mean, there are people who are SPAC investors, like Jamie Mendola from Air he ran a SPAC fund, so he's one of the smartest people I know about it. But for Akerna, well, it was MTech at the time. It was hard to talk to the companies we were trying to target for the SPAC because they didn't understand how it would function, and I get that. It's a feat of engineering to make these things work. But from an investor standpoint, the sponsor, people put money in, and then they have that warrant attached usually. And if they decide to redeem, they still have the warrant. So it's just kind of like the interest on your money sitting there in the SPAC while they identify the target in a way. You've got the upside, but if you're not fully in love with it, we see a lot of, there were redemptions in quite a few. Parent company had quite a few redemptions too in terms of a ratio, but SPAC market is tough right now, man.
Yeah.
Yeah, now it's apparently all about Sparks. Not related to the retail group in California, but I know this Pershing Square. Have you guys seen this? Yeah, that they're now a special purpose acquisition rights company. Does that sound? I think that's correct. But yeah, one more thing to have to figure out. I'm not that close to it, to be honest. I just thought it.
Is that what Headset's pursuing? Going public through a Spark?
Through a Spark, yes. Here to announce. Watch for our Spark. Yeah. Once I understand what it is, maybe we'll see. Well, speaking of investment, why don't we gears to Canada now and kind of talk about some stuff going on up there, across the border. I think talking about access to capital and being able to trade. We see companies like Tilray today when we're recording June 9th. When I looked this morning, they were climbing the charts, and not a lot of news coming out of Canada. Nothing particularly notable. Obviously, Tilray made some headlines with their merger, becoming the largest. Although now I think there's some others that have made some deals, like the Redecan deal. Yeah, Hexo. So Hexo is probably the largest at this point. And so, just interesting to see that stuff. Any thoughts on what's driving that overall?
We live in a crazy world, and it bothers so many of us who are either investors or operators in the American space. Just you say Canada, but those stock prices have nothing to do with what's going on in Canada. Their fundamentals are not very good. They're not as good as the Canadian market. They're subpar for that market. They trade as if they're going to enter the United States, which is very far from the truth, most likely. Although, the CEOs of this company certainly, they're happy to feed the myth. They don't mind. But so it's all about NASDAQ, New York Stock Exchange, or basically NASDAQ. And, we have a new way of investing. You go on the Wall Street bets, you see what's going on, and you buy it. And you don't necessarily understand the nuances of, wait, time out. Okay, well, I remember back in 2018 when California first went legal, the first doors open, and people are buying the ETF MJ. And you look at what's in MJ, and it's a bunch of Canadian LPs that have nothing to do with California. In fact, I think it's accurate to say that not a single company in that ETF at that time had anything to do with California, yet people have money and they buy it ignorantly, and it goes up a lot. And so that's what we're dealing with now, and it's frustrating. I mean, I bet it bothers you, Emily.
Oh, well, tremendously. I mean, I always talk about this. I'm like, I wish we could direct capital to the good shepherds and the people who are really building businesses that could be here in the long run. Sundial benefited from this crazy meme stock thing and basically paid off their debts doing it. So good for them. But it would be amazing if that type of capital flowed to even if it split across 10 names in the U.S. sector. It would be incredible, the things that could be done with that capital, and job creation and product expansion and so many different things that would be truly beneficial on the bigger level. But, this is when I watched Munger and when I watched Buffett and Munger many weeks ago now, it feels like they talked about this, and I just feel like the market has become even more of a gambling situation than it has been an actual investing machine. And it's, and you see it
Bitcoin, on right?
We're living with things in the ether at this point, and it's really crazy. But I think that it'll be interesting to see how this all shakes out. But yeah, Tilray definitely benefits from that. And I saw, we were talking about it too. Like, you see Irwin kind of getting involved in the Reddit community. And I'm also wondering where the regulators are on what's acceptable. How are we thinking about how we talk about things? I mean, I still have issues with some of the advertising I saw from Robinhood over the last few years, where as a person in the financial industry, I know there are constraints about how I can talk about things. Like, I can't talk about promising returns or promising that things go up. And I feel like a lot of Robinhood's advertising was like, did you know if you put your money in here, it could be here? And it's like, well, it could also be there. So, it's a very complicated thing, and it does kind of drive me crazy because I just think there's a lot of better shepherds of capital. So,
yeah.
And I think you're absolutely right, Alan, that it's all about the access to the investor base and for the investors to have access to the names. But we'll just keep pushing. I hope many people are contributing to, policy groups who are trying to make changes in the capital markets and in equity issues and all of these things that we all talk about. We have been investing our own, like the actual people who founded Poseidon. We put our money behind all of these efforts and have since we got into the industry, and will continue to do so until I feel like things are fair and right. So I hope everyone's doing that, because that's the only way that things change.
So you're paying the lobby to get NASDAQ listing for all these companies? Is that part of it? I guess we all are, if you're a member of NCIA or some of these other organizations, right?
Yeah, we pay for political consultants to help us to understand the landscapes in both the state level and on the Hill. And we also do work networks to get access to speak to people in decision making and key stakeholders at these different groups like the NYSE, NASDAQ, and trying to understand their concerns. A lot of it is about hearing what are the perceived risks of inviting U.S. cannabis names into these different areas. So that's what we're trying to understand so we can provide solutions and answers to it.
Well, I'm a rational person, so this bothers me on so many levels, but I see plenty of publicly traded power companies. I know that they have cannabis companies as customers. If you want to just look even closer, I mean, I'm very happy that GrowGen and all these companies trade on the NASDAQ, but does it make any sense that they can take money from these dirty cannabis companies that are state legal but federally illegal? Dirty. And yet they can trade. I don't understand it. It is crazy. And I think Ben Kovler said how crazy it is. If you want to buy a Canadian company, you buy it in America. If you want to buy an American company, you got to buy it in Canada. What is this? It's crazy.
Yeah, everything's upside down, topsy-turvy.
Yeah.
Do you think, is it, obviously lack of institutional capital that's in the U.S. markets is kind of the big driver, mostly just being retail investors?
Yeah, there are institutions. They don't get the liquidity that they want, right, Emily?
Yeah, there's no way. If an institution wanted to sell a meaningful part of their exposure to a company, they could destroy the market with one fell swoop. So you've got to be really careful about how you move. Even Poseidon, we have to be very careful about how we trade in these names. And we do. We're very careful about it because we're truly interested in the best side of the market. Just because we want to potentially move out of a position doesn't mean we want to destroy it in the process. So we're very mindful of our actions and how we work through the challenges of this market. But that's one of the things I think, from a liquidity standpoint, and it just in case folks don't know, liquidity for all intents and purposes means your ability to trade in and out of a name and having enough people there to trade, to hold the stock at a certain level and to respond to your interest in selling or buying. And believe it or not, it's an actual challenge in cannabis because there's just not enough out there and not enough traders, not enough stock. It's a number of issues. And so, we face that with Ascend every day. Mm-hmm. In terms of what's able
to trade like 500 shares a day sometimes.
Whoever's lucky enough to get those 500 shares.
Once the unlock hits, it'll get a little bit better. But I was going to say, Sai, one of the coolest things in the last 9 months has been mainly GTI, because they've done the best job of this. But I think even some other companies have really found some institutional investors. And GTI, they were able to do direct placement with no commissions to brokers or anything on both equity and debt. That says a lot. And I think I always want to know, I asked GTI, well, is that entity going to buy another company? Nope, they just like us. Bummer. But there are more and more companies out there that want into the space and that are somehow able to do it, get through their compliance departments. The market had to deal with a very sad story. Wasatch, great investment manager, loved the space, took positions in a few names, and you can go look at the charts and see what happened at the end of March. They had to exit. There was a change in policy, and so they exited. So it's 2 steps forward, 1 step back. But I think we can sound sad about this, but the reality is, these companies are thriving under very adverse conditions. It's suboptimal. I don't know, maybe it's not adverse, but suboptimal. Lack of access to capital. weird rules about not being able to ship across state lines, which sometimes benefits but also causes a lot of problems. 280E taxation, all these things that we all know about, but maybe listeners don't appreciate how hard it is to actually make a profit in this industry. Yet, you can go to New Cannabis Ventures and see there are companies that are certainly creating operating profits. That's what we list, but even net income. You're starting to see some of the major MSOs generate not only positive net income, but also positive free cash flow, which is, if we can do that in these conditions, it bodes well for the future.
Yeah.
It's like training at altitude.
Yep.
Right. Yeah, that's a good way to put it. One more subject, we were talking about the Canadian stocks and Wall Street bets and, all this kind of craziness. I think, anecdotally I'd heard that during the pandemic with like sports lockdown, everything shut down, a lot of people went to things like Robinhood, right, and started trading. So all of a sudden you had, this big push of retail investors. I don't know, how true that statement is, if that really was the case, but I think it makes sense, when people didn't have an outlet for things like sports betting, or they just had more time on their hands and they're like, I'm going to get into this, day trading as a retail investor. Do you think that's going to pull back now that, we're kind of on the precipice of an end, or end is in sight of a pandemic? Or do you think now that people are in it, we've created this engine of these meme stocks that will just continue on for years to come?
I think that gambling is an addiction, and I'm being quite serious, whereas cannabis is actually not addictive, except for if you have an addiction to like the experience around it, and that's like a whole other separate thing, but it's not the plant itself that's that way. But gambling is very addictive to people. People really have issues with this, and I feel like it's like hitting an endorphin rush every time you can hit something and it works. And I think the markets have been very kind to people who've been kind of playing in this really crazy gambling, speculative. I know we've talked about this side, but the due diligence rooms and Reddit, like as an investor, it makes my head explode. But I think that it's an endorphin rush for people, and there's gamification for sure on the platform like Robinhood. I kept thinking that there would be a reinforcement of the concerns around this when something went wrong. But even yesterday, I saw people who were trying to get out of options where it was crashing. And like when you start getting into these more complicated forms of participating in the public markets, if you get like frozen out of an app or something's going wrong and you get on the wrong side of that, it can be very, very bad. You can get really upside down really fast. And I think that I've been waiting for more of that kind of wake-up call for people to realize this isn't Instagram crossing over with TikTok with your bank account. You know what I mean? It's real. There's a lot to it. And so I've been waiting for that to happen a little bit, but it doesn't seem like it has. But I do think if we have a huge market correction, maybe there could be some ways of people changing. Another thing could be if the regulators decide how they feel about how this all functions. That could be another way to do it, because I do think people are bending rules in this new way that we participate in a market. And I think that the regulators had ways to contemplate where the line is on that before, but they don't have that line anymore. And I think they're trying to get their arms around it. And I've been saying since we got into investing into cannabis with Poseidon, we can only take accredited investors because we're private funds so far. And for me, that was always really frustrating because I always wanted cannabis investing to be democratized, and I wanted people to have access to the best ability to grow generational wealth in an industry that I think is a generationally impacting industry. But I do think that I want more protections around retail investors who are trying to do that through these platforms and not get burned on the wrong side of these things just because there's complexities or challenges that maybe not everyone understands. So
I think you raise a good point, Sai, about people coming into the market bored, time on their hands, money because they couldn't spend it in other places. They may have actually consumed more cannabis. We're going to find out how sustainable that was pretty soon, right?
Yeah.
Right.
As we anniversary that. But from my perspective, I look at all this as a distraction away from our space. I don't feel like our space So in the fourth quarter, we had a great rally, and that rally was driven by mainly the state elections, I think, maybe a little bit because of President Biden, because people don't understand that he's not really our friend. But it was really, I think, seeing Arizona and New Jersey legalize really helped. And so we had this rally, but it was a silent rally. This was not something that was new traders flooding into the market from my perspective. I don't have the hard data for that, but I know what I see and read, and my subscribers coming in or whatever, and it didn't seem like that. Now, early in the year, after all the stocks went parabolic in February, I think that pulled in some of this gambler type of money. But I think that it's really hurting us, honestly, because the gamblers don't like the cannabis space because they have to choose between buying crap like Tilray or they can't buy the good stuff. And so, I don't know. That's just my perspective. I feel like people like Coinbase until they don't like Coinbase a few days later, or they like Bitcoin until they don't like Bitcoin, or buying SPACs. Oh no, we don't want to buy that anymore. I don't feel like cannabis has really been part of that cycle so much.
You know what I do like? I love on Twitter. I know there's controversy around it a little bit, but MSO gang, and I follow
You
that.
like that?
And, yeah, and I follow all the folks I just see I think of them as like the fam out there. They're like trying to invest in cannabis. And that does warm my heart. And I feel like that's like, defies what, some people, I am a big fan of retail investors. And I feel like some institutional people kind of like look down their nose at them. But I think retail investors are just wonderful and they deserve to have access to everything. And so, but what's the coolest thing is the cohort of active cannabis retail investors they are doing the diligence. They're listening to they listen to you, they read your what you put out, and I think that it is an educated and an incredibly savvy group of folks who are really investing in an industry that they believe in, and so that's really exciting for me.
Yeah, and it seems like they're trying to discern the truth, kind of like the things that we're aware of about how Sundial isn't really a cannabis company; it's an investment company, right? But I don't think a lot of people really appreciate that. And the thing that worries me about, and I've never done the hashtag. I mean, I have respect for these people, and I agree with you. Retail investors are great. That I work with a lot of them, right? But this whole idea, it's like so territorial. And I tell people there's more to investing than MSOs, and I have a lot of MSOs in my model portfolios, but I have other things, even one Canadian LP right now, but Canadian retailers I think look really good. So I feel like you get tunnel vision when you adopt that hashtag, and I just would rather be more open-minded. But I agree with your observation.
Yeah. Well, all good stuff, and it'll be really interesting to see how it all shakes out. Hopefully, it loosens up, and things change, and we can get better exposure for the companies that do perform well, and really reward them for all that work that they're putting in. But I think this is a great place to wrap it up here. Before we go, Alan, where can people find you, and what's new on your side?
They can find me behind my desk, on my butt. That's where I seem to be all the time. But probably the easiest place to find me initially is just to go to newcannabisventures.com. It's free. You'll learn a lot there. And if you really want to find me in other places, you'll find me through that.
Yeah, I can definitely vouch for that. It's a fantastic resource, and I use it all the time to kind of stay up to date with what's going on. And Emily, how about yourself?
Oh, you can find me on Twitter at Poseidon Asset or at MPAX1, I think is my Twitter handle.
Number one.
Or on Instagram, MPAX10.
Fantastic. Well, thanks again, both of you for joining today. Great conversation, and looking forward to seeing what happens in the week ahead here.
Thanks, Sai.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.